So we have started the recording, and let's start with the first slide. We're not in the presentation PowerPoint mode because of some technical glitches, but anyway. So today's topic is the breakouts or pullbacks, and it's using our TR chart, trend recognition indicator tool, and our advanced stocks analysis software. To start with, first, let me read out the disclaimer. The material presented here is for educational and learning purposes only and should not be taken as any purchase or sell recommendations. Trading, investing in stocks and derivatives, especially futures and options, is risky and could result in a substantial loss of invested capital. I'm not a registered financial advisor with FINRA or SEC, and for any financial advice, please consult a registered financial advisor. And the reason it is important that all the time I keep on receiving requests that, hey, I have this much amount of money in 401k and this IRA account. How much should I invest there? How much should I invest there? And I keep coming back to people and telling them that, look, I'm not a registered financial advisor. I cannot advise you on your personal financial issues. For that, you need to have services of a registered financial advisor. And normally, I even do not respond to those requests. Anyway, it is about to start with, this is a lot of you have seen the demonstrations and the videos, and some of you are using this software. This is an Excel based software, Microsoft Excel 360, Microsoft 365. You need to have a subscription for that. And the reason is that we need the subscription version of Office 365, that we need live stock data. Now, the data which is coming to the Excel is not live, it is 15 minutes delayed. But for that, you need to pay a subscription service to Microsoft. Now we are considering to moving it to another platform outside Excel, so it could be used by a broader, wider range and much bigger audience. But for the time being, this has been programmed in Excel itself. So just to give you an idea, if any customer have any question, I will be glad to answer that. When you first started, let's move this thing out here. So we start with this screen. And this is the first worksheet. This is user interface. You type in the name of the symbol here, so it will update the spreadsheet accordingly. And not only this spreadsheet, but the other parts of the different spreadsheets. So it tells you that last time it was 5.91% down on Friday, which was the last trading day, which was 11, last trade is giving us yesterday, because there might be some 24-hour or post-market trading in that. So that's why taking this information from the system. This is a range in which it operated or traded during the Friday's trading hours. So it was on the lower side, close at 324.63. On one time it was 350. So that was sharp decline, and it was a broad decline all across the stock market, and most stocks were affected by that particular tweet by President Trump on China tariff news. We have a list of stocks on your right side, so we can choose any one of them. And when you choose this, it will update this screen and other screen accordingly. It gives you an idea of what this company does, what is the business, which exchange it is traded. Like this exchange is traded in New York, NASDAQ stock exchange, this particular Broadcom stock. And it also gives here a snapshot summary of its performance from 5 days to 5 years and year to date as well. It gives some fundamentals which are available inside it, but if you want to go into the depth of fundamentals, you probably need to go to the research link, like in these websites, investing.com, Yahoo, Zax, and MarketWatch, and it will take you, if you press this go button, this will take you to that website so that you can uh, do research much more deeply. Here is the market performance segment. So as you can see, all the major markets were in red, from minus 2.7% to 3.5% of NASDAQ 100. VIX was up 31.8%, so above 20 threshold. Gold was also up 1%. Oil was down 4.3%. So all these things were contributing towards the decline in the stock market on Friday. Then it comes to a technical section, and we have a number of technical indicators calculated, around 20, including these. It also gives you profit and stop loss targets and some key moving averages. Like for example, today the price was 324.63. If you enter, where should we have a stop loss according to our 8% to 10% rule? And where should we look for the profit target? If you're looking for 15 or 20%, it should be the level. Then it calculates support resistance levels for day traders based on classic Camarilla and Fibonacci pivot point methods. And it tells us that 54% of these technical indicators give a buy signal. Some are sell and neutral. So what should we do? That we need to evaluate in details. And then we have our own proprietary TR indicator. It tells us that it is in a neutral buy zone. It is still not in a sell zone. It is still a neutral zone. And we are inclined towards being bullish in this particular stock. Here you can have the chart plotted on different time frames. You can select from 1 month to 5 years, either daily or weekly. And you can also use different methods of charts like candlesticks and line chart. And you can add different indicators here, like you can take a look at volume, average volume, is RSI, and different. You can select among these accumulation distribution, PPO, which is a modified version of more famous MACD indicator. Accumulation distribution is one of my favorite. It's a secondary indicator. It tells us that the Wall Street is continuously accumulating the shares of this company, even if it goes down. During last, it starts from year 20, 5 years, because we have chosen 5 years time frame here. On your right, if you scroll here, it tells us the seasonality chart for last 5 years, because we have selected 5 years here. And it tells us that these are the months, this chart, this particular stock, avgo.com, has given this much return. And for example, December, 100% of the time, Broadcom has closed higher than it opened, December and this month, which was July, I think, or May. So historically, and its return in December has been phenomenal, 18.27% on average return. 7.92% in November. October is 1.7%. September was just 0.35%. April was minus 0.75%. Average of last 5 years. So we can select different 10 years, 3 years, last year, 15 years, if the data is available. And it will tell you that which period is more historically bullish for this particular stock. And as we can see, as we are heading towards November and December, those 2 months are interesting. And we probably could leverage on the historical tendencies to have some good return from this particular stock. If we move on to the next worksheet, here we can have a number of different watch lists, and we can, that was one stock like Broadcom here, but in this watch list we can have a list of stocks, and in one go we can ask the Excel to update the table based on the field we select. For example, I selected these as a result of my scans for the upcoming period, and it was telling me that this is their performance. And towards the end, it also tells us what is our proprietary TR indicators telling us. So our TR indicator is telling us, for example, this particular stock, these are interesting: Alliant Pharmaceutical and Zymeworks. Those are, it's also a biotech. And Dell Technology is neutral bio, but it was interesting. And so, and Applied Digital Corporation is in a strong buy zone. So we are having different kind of we can use this software to do a different type of analysis using these watch lists. Coming back to this, the TR chart has not been updated for Broadcom. It is for Apple for the time being. And we can by press of one button, we can, the TR chart allows us to see different buy points and the suggest stop loss zones. Once you update this worksheet here, for example, Broadcom, in if I update, it will automatically update the TR chart, but that will not be showing the buy and sell point. For this, you have to go here to save time, otherwise it gets slower. And then you press this button, update buy zones, and it gives you a list of all buy and selling points uh, for last 1 year, based on either the daily time frame or weekly time frame. This tool does not work in offline mode because it needs fresh stock data. The question, it needs fresh stock data all the time from the stock exchanges. So it does not work in offline mode without internet. You have to be connected to the internet to update these charts. Because anytime you will, for example, if you type here Broadcom or Dell, so it has to download the data, and it is storing data for that particular session on your computer. So there's no central kind of a cloud storage for this tool. So coming back to this work on any stock or selected symbol, yes, all those stock or selected symbols which are traded on US stock markets, any of US stock market like NASDAQ, New York Stock Exchange, or MX. It supports all those stocks and ETFs. So let's see, we want to see on the weekly chart, there's too many buy signals and say, what should we do? And let's first update this thing for weekly chart. And for weekly, we need to probably go to the 3 years time horizon and update this chart. What it does, it downloads the fresh data for 3 years and then it starts plotting those buy and sell signals on the weekly chart. Now, the weekly chart has been chosen, and these two lines, these red lines and this blue line, these are 10 EMA and 30 EMA. So it means for the 10 week and 30 week. And as you can see, the way it works, if there was one question that how the TR chart works, although it's my proprietary tool, so we cannot describe its technical details, but for the understanding, it has 3 stages. 3 stages in the bullish time frame, and the 3 stages for the bearish time frame. So let's see, first stage is this small green triangle. When this appears, it means that either from a neutral or from a sell trend, the trend senses the trend is now starting to change. So this is the first step, and the trend can hold or can fail immediately, especially after a long stretch of bullish period. You might find that this first stage can fail at least 2-3 times, because this is just a starting point, and normally the first attempt results in a failure. The second attempt is not showing here because it's very thin. It very quickly changes to the third stage. Second, it says that okay, now the trend has established itself, and now we have an uptrend, although it could be light in intensity. And the third one is when we have a strong green area, it tells us that now the strong bullish trend has been established for this particular stock. And not only this, it calculates 2 things. It checks its direction, it means strength, how strong it is, and it also calculates its speed, momentum. So when you have this kind of a green zone, it means on the upside, bullish side, now you have a strong momentum and an established bullish trend. On the flip side, you have this red diamond that's telling you that it is sensing that the downward trend has started. Very initial stage. Then you have kind of this orange and then the red. That means a downward trend has established itself, although it is not that strong. And when you have this kind of red bar, it means that now we are in a period of a strong downward bearish trend. So on the flip side, that's how it works, and on the bull side, that's how it works. Now, our strategy is generally that we also need to find out that either our general market is in a bullish trend or in a bearish trend. For that, let's go back to our presentation and let me jump to this slide. So we are in a long-term bullish trend. I hope you can see this is S&P chart. And we are in this bullish trend is from the start of 2013. We had this bear market of 2008-9, and we came back, but we came out of this bearish cycle exactly in 2013. And since then onwards, we never looked back. And we are in a constant upward trend. Yes, along the way, we will have pullbacks. We will have uh, we will have correction 5-10%, and but we're still in a bullish trend. One way of looking at it, this is a monthly chart, by the way, because it's a long-term chart, around 18 or 19 years, 20 years to be exact. One thing is that it's a monthly PPO. If it comes below zero, then we can say that we are in a solid bearish cycle or bearish market. If the monthly PPO never goes below zero, it means that we are not in a bear market. Simple as that. Another question was that volume into account. No, volume is not taken into account. That's something that we have to incorporate in our analysis. One of the tool is not taking volume into account, but it is taking how the price is changing, the speed of change of price. Now, this particular slide, I found it interesting. Some of you might have seen it. This is 150 years old from Samuel Banner, who was a farmer, and he published a book on market analysis on periods of panics, good time to buy and good time to sell. And that was very manual, no computers and no fancy charts at that time. But it tells us that, okay, these are the periods from, let's say, 2019 and this 2018. These are the period then high prices and time to sell stocks and value of all kinds, according to his strategy. But it is remarkably very close to whatever actually happened. Right now, we are in this period, but it's saying again that 2033 and 35, that period is going to be another bearish cycle. So going back to our chart, generally the life of a bull market, a bullish trend is 20 years. So if we calculate from 2013, then we can say that this trend probably will continue. High chances are there that this trend will continue all the way up to 2033. Yes, there will be deep correction, maybe 20%, 33%, 30%, 15% along the way. But, but as long as this trend persists, we will come out of these pullbacks very quickly, as it has been the case in recent past. Now, what exactly? Okay, we coming back to this our Apple chart, the TR chart. So basically, there are two strategies. Either you buy something when the stock is breaking out, like Apple. So in this particular case, our TR chart actually gives you a very good signal, and it tells you that that whenever it's in along a buy point, and if it is in a green zone, we have to look at certain other thing as well instead of just blindly following the charts and signals. And then we came down, and then we follow follow the right as long as it remains here. And when we find something like this or this red diamond bar, it means now it's changing its directions. And sooner or later, we should expect that it will come down. So if we have strong or good profits, then we can take some profits. And if it breaches these key moving averages line, especially this red line, which is 30 weeks line, in case of weekly, then we we can just quit the trade and call it off. There was a question: the stock went down after a buy signal. How we read and analyze that signal? Look, anything can happen anytime. Now, let me tell you this. For example, we are here. Buy signal is here. So this is our buy point. So it does not mean that we should start buying here. That's going to be called an early entry. We should always be look within 5% of this buy point, and if it is in a strong green zone, that's really should be our buying strategy. Now coming back, another question: how should we analyze the buy signal in red, green, white zone? Buy signal should always be a buy signal should always be taken seriously when the strong green zone appears. I will come to this strategy in details. So how do we use this? The TR chart is just one tool. It's giving us buy signals, stop loss signal, others. But the way we select our system, our works, is a complex process. This is how our decision flow. We have different screens, our own screens, bullish preview screen, strong earning list, accumulation distribution list. Then we have market generating information from different sources like Barron's, Investor, Business Daily, Wall Street Journal, and others. Then it comes to our software. We just focused on leading stocks and leading industry groups. So we measure its relative strength and peer industry versus industry and other groups as well. And its industry groups and the broader index as well. We also take a look at its recent performance, then the TR chart, some other technical indicators, and we also pay attention to what is the seasonality pattern behind it. Like I said, for Broadcom, November and December is a good season to be in that particular stock. Traditionally, tech stocks have a bull period from July to August, then a weak period from September, October to late October, and then a bullish period from late October onwards to mid-January. Institutional buying, seasonality, we want to know whether the stock is being strong, is being supported by institutions, by funds, by banks, by managers. And then we apply some secondary filters, like something like this is an ethical stock in line with our values, and then we come up with our final list. This is what we do every week. And then we update our weekly complaint stock page according to this decision flow process. Based on this breakout or TR using TR chart and our overall strategy, this is our performance for our picks during last 6 months from April to 6th of October. And as you can see, now we have a very strong practice or rule of cutting out our losses within 8 to 10% only. Within 8 to 10%, that's it. So we do not allow stocks generally to go beyond 10% of loss. There are some exceptions. At some time, we might feel that the market has been too harsh on a particular company or stock, and it has strong fundamentals, strong product. In some stocks, by very nature, are highly volatile, like cryptos, like crypto company stocks, like new IPOs. So we have to give them a wider margin if we want to be there. Otherwise, normally we tend to incline towards more conservative, more established companies. So for example, here we had some very good winners, CRDO technology, and Micron, which is an NVIDIA. They are giving us a very decent returns, 90% plus for NVIDIA. A-Lab gave us something around close to 100%. IONQ was another stock, gave 60% plus. Microsoft was not that good. Like 17 or 18%, or there are some very decent winners, GDX and SMH. Now we are planning to move this, take this TR chart and take it to the next level. so that it will be more interactive on the in the website. But for the screening purposes, what it does, we can have a list of stocks written here. Whatever you want to write here, add any stock like Microsoft, whatever. I want to see Microsoft signal and I want to see Apple is not there. For example, maybe a video. And if I press this is go here and run this scanner from here, it will go check each one of them. And you see it sees okay, last night was run, so it's not going to update the already evaluated stock, but it's going to update Microsoft and Broadcom for both daily as well as weekly signals. And it came back and it tells us that okay, there is skin through all of these, that these are the Microsoft is a neutral buy, and so is the Broadcom on both uh, weekly as well as daily time frame right here. That's how we can use it to prepare our custom screens and custom list, and then run the screener to update the list and their TR signals accordingly. Now, how to read the TR signal, we'll come to that part as well very quickly, just to show you how the strategy was successful. So the 77.6% of the trades chosen during last 6 months were successful. So out of 67, 52 were successful, means they were positive in return, and 15 were in losses. But we cut down those losses very quickly. So overall return has been very positive. So how do we do that? That we want to have a bigger, larger winner, as well as more than 50% of our success rate. If someone tells you that okay, my strategy is a holy grail and it works 100% of the time, that's not true. No matter what you do, what kind of system you adopt, what kind of method you use, technical indicators, blah, 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 you will always come across with losers. That's because the very nature of this business. You don't know what is happening, going to happen tomorrow in the Trump's world, or a geopolitical conflict, or the business environment change, and these things affect the future performance of these stocks. We discussed this thing, the bullish trend, and how long this bullish trend we can expect to continue beside those hiccups, those occasional pullbacks and corrections. So we will check some cases one by one, that how can we use this methodology. Now there are two different systems. One is breakout, otherwise, and that's the theme of today's presentation. One is breakout and other one is pullback. So either we buy stocks on breakouts. Breakouts means that we have something like the stock is here and is breaking out from this buy point. The stock is here and is breaking out from this buy point. The stock was here and breaking out from this buy point. And when it happens, the stock was here and it was breaking out from this buy point. When it happens, then we come across with large winners. Another strategy is to let the stock come down to a support level, some good moving average, or which we identify. And now for the breakout, we use based on TR indicator signal. We buy when the strong green zone appears, that is the strong momentum zone, and within 5% of that buy point. We want to look our TR status like this thing. That is a strong buy in a zone. This up arrow means that it has just started recently. In other words, it has just started in the last period, either the last working day or the last week. This check means that it is within 5% of this buy point. This is what we were trying to emphasize, that we should go for, if it is the stock is within 5% of this buy line and it is in a strong zone, then you should see something like this, a strong buy and this green zone and a check mark. And if this asterisk appears, then it is an additional plus point. It tells us that it's not only within 5%, but it is showing relative strength against S&P 500, and Wall Street is also accumulating its shares. So we have, in other words, we are increasing the success chances of probabilities of our trade. Question was, is it within 5% above, below, by point, or only above? The answer is it is within the 5% above or below as well, as long as it is in a green zone. When it is 5% below zone, 5% below this buy point, then you should look for something like a test of this moving average or this moving average. This is a 10-week moving average, which is close to 50 days, or this is a 30-day moving average, which is close to 200-day moving average. But it's contingent. It's contingent upon the condition that the market is still in a bullish trend. Maybe the trend is changing its direction. Maybe the market is changing its direction, is coming from green to red zone. Then probably this buy point will fail and it will fall down. Simple as that. So we have to just do not blindly follow the chart. We also take a look at what the general market trend is right here, and whether this stock is showing good relative performance within its industry group, as well as against a broader range of in the broader index. Early entry, if in green zone below buy point in first stage of TR indicator, sometimes we take higher risk only when market is in our favor. And we see, okay, first stage has occurred, green zone has not appeared, but we know that stock has already found a support just below it, just like here. So there are strong chances that stock will defend this stop loss level and this support level here. Then we will go and we make an early entry, because we want to have a higher reward to risk trade as well. So different strategies are adopted at different point of time. Now that was the breakout strategy. Yes, it's good to look for daily chart for swing trading, but my strategy generally and my pattern is that I just don't go for a few days. I would like to, even if we want to go for swing trading, I would like to go for a stock which I know is a long-term good stock, like Broadcom, Apple, Microsoft, Nvidia, which we, from the history, we know that it has come back every time when it falls below. Rather than taking chances on a new stock or a new company which has not proven itself yet. Pullback. Generally, I have a rule: don't buy below 200-day EMA line, because I myself personally, I'm a long-term trader, not very short-term trader. So I don't look for anything which is below 200-day EMA line or 10-week EMA line. Now, what does that mean? Let's see. This is stock charts, and we go to any good stock, maybe Nvidia. No, no. Nvidia is a good stock, it's too good. Maybe let's see, we go for ServiceNow, Alibaba, whatever. So let's go for ServiceNow. Generally, if you see the tendency, this is daily, and let's go for maybe 2 years. Generally, you see a pattern here. If the market is in a bullish, market is falling right here, early April, March. So we know the market was not good. So the stock, we expect the stock to come and below and stay here. But if it market is strong, whenever it comes down to 200-day EMA or below it, it always fights back and comes back in a strong manner, like here early last year, June, even this year, April. So we know from past history of this particular stock that when the market comes back above 200-day line, this stock always pull back and give us a decent trade, high reward to risk. So our chances of betting on this stock when it comes down below 200-day line and the market comes back above 200-day line, that our chances of on a pullback to buy at low level are higher. Let's move on to weekly. And you see on the 200, this is a very long-term chart for 200 weeks. it hardly for last how many years? Let's go for 5 years because we are looking at now. Apart from that cyclical bear market during 22, whenever it came close to this 200-day, no, it's not day, it's week, 200-week EMA line, it always snapbacks and give us a hard time. That's a pullback strategy. Now, what would happen to TR chart? TR chart will obviously negative and red during this zone. No questions about it. But TR chart works best on breakouts. When you have something like the strong green zone, and those green zones will not appear below this red line, which is a 200-day line in terms of weeks, or in terms of week, it's 30 EMA line. The green zones will not appear. Simple as that. That's not how the TR chart works. So if we do not want to follow just the breakout, we want to also look at the pullbacks. Here are the things we need to consider. On a safer side, I don't buy below 200 AML line. That's just me. Some people are high risk taker. They want to take extra risk, so they want to go for it. So I cannot challenge anybody. If you, for example, problem is if you want to buy below 200-day line, normally, let's say this is 200-day line. When it first breaks this line, you can expect it to stay here, and every attempt to go above it will fail, most likely. You see how many times it fails? One, two, three, four, for maybe a dozen times before finally it came over that line. So if you buy something from here, you might get yourself stuck maybe for months or years, even in a good stock. So that's why you have limited capital. Everyone has limited capital, and you get highest returns. You don't want your stock to be just get stuck. Your money will get stuck with a stock which is below its 20-day, 200-day moving average line, and every time when it tries to come back, it fails. So you want your stocks to be working on something which is working in your favor. And for that, the best strategy is that you do not buy below 200-day email line. Now you buy if it is above 200-day line and constantly finding support on moving averages and support levels. And you know the company and behavior of its stock from past pullbacks. So for example, what is the behavior of NVIDIA? So let's go back, and this seems messy because it's 5 years. So let's go back to 1 year, maybe 2 years. NVIDIA behavior is that it does not like to stay below 200-day EMA line at all. Whenever it comes, it snapbacks. And if it comes, then it comes only during when the market is in a bearish cycle, either for some months or that is known as uh, a cyclical bearish market. But if it's in a secular bearish market like 2009, then it can stay for maybe for a year. So you know the behavior of the stock is that it does not like to come and stay below 200-day line. So on every pullback to the 200-day line and even the lower Bollinger Band, you would like to give it a shot, a chance to move back. For that, you adopt this kind of uh, pullback strategy, not a breakout strategy. In addition to that, even during breakouts, like say we are following our breakout strategy and TR chart. So here we are. We find that it's a green zone, but it failed. But it came back here. Now it already has established a green zone. It was and the market is in a bullish cycle. Then we can take a chance on this pullback. Instead of just following the TR signal, we can take a chance here. But see that is more risky. So it again fails, and finally it came back. So in my experience, for the stronger stocks, even buying around the buy point on the breakout is a better strategy. Unless you have a strong conviction that you are at a very strong support level somewhere below here, and stock because of the fundamentals of the stock and because of the general trend of this market, S&P 500 or Nasdaq or whatever you follow, then you can take chances on a pullback. Now, if it is below 200-day lines, or in this case 30-week line, there are higher chances of filling it on the. Let's say take how many weeks here from December of 2023 to April of 2024, which is more than 4 or 5 months. So if you try to buy below these lines, you will risk a higher chance of getting stuck with this stock for maybe 6 months with no return at all before it finally moves. Question was that the EMA lines pre-configured. Those lines are configured for this TR chart, but you can always go to the settings right here. In the TR chart, you have these configuration for the daily. One is slow EMA, which is 200-day for the daily 30 weeks. One is 50 and 50 days and 10. And you can change those lines. If you have a better understanding of moving averages and experience, then you can change it. For example, you can instead of 200, you can adopt 100 day week line if you don't want to go that long term. It depends upon you. There is obviously some range, like weekly, you cannot go beyond 50 weeks because of the data limitations. So that's how you can configure your tool. Similarly, our preset configuration was 5% buy point setting, 5%, as I said, and stop loss is 7%. But you can change it. No, I would like to buy something around maybe 8% within the, or stop loss, I would like to have 10%, whatever it is. You can change this configuration from the settings and then the system will work. Now, what it does, it has a backtest strategy as well. For example, if I run the backtest here, based on those settings here, the 7% loss and 5% buy point, and based on these EMAs, where do you want your pullback or exit strategy to be taken? Based on that, you can see make different scenarios and run the backtest according to your configuration. I hope that I answered that question. So let's evaluate some more stocks. I prepared a list of, why not Max 7 stocks? Why not Alibaba? We evaluated the TR chart itself does not include volume. As I mentioned here, for volume, you can take a look at the volume right here, that is it above average volume or below average volume in this indicator, volume and above average. But the TR chart itself does not take into account the volume, because volume is a relative subject. And some days, maybe, for example, I tell you, if you have a stock split, then your volume 5 to 1, then your volume probably will increase by 5 to 1 because now you're trading a smaller stock. Coming back to this thing, presentations, let's see Alibaba. We are not going to check all the stocks and see what Alibaba's TR chart says for 3 weeks, maybe weekly or daily, whatever. Let's change it to Baba and press this update buy button and see what Baba says. It's going back for 3 years, and here it is. Now, Alibaba was a long-term bearish trend. But once, and you see, okay, let's start from this. But you are in 2023. Did it come to this buy point? No, it did not. Did it come to this buy point? Yes, but the green zone was not here. Did it come to this buy point? Yes, but it failed immediately. Did it come to again this buy point? No. So we are not making any entry, will not. Then we start a bearish cycle again. So the first attempt of TR chart failed. And then we started a downward trend. Then the first attempt again started, but again failed. Here is the point. It crossed this buy point and a strong green zone appeared for the first time in last year, August. And see, it was successful quite a bit. It changed from something around 80 all the way to 110, which is approximately 30% or even more return on that. Now, most recently, Alibaba, take it to the 1 year and daily chart only. The reason I switched to 1 year because 5 years on this particular screen will look very messy. Too many signals we want to be. Now, recently, what Alibaba was doing, it came out of this red zone. So immediately you don't expect it that it will go straight through. But here it was what its behavior was. Every time it was trying to come back, it was finding support on this blue line. So we called an entry right here on this pullback. So this is exactly not a breakout strategy. We were looking at the behavior. We find that it was continuously coming in these green zones. And every time when it comes to the buy point, it used to fail, but it was finding support and support was increasing higher lows. So finding higher lows, that was the point on pullback to make an entry in Alibaba's. And we did that sometime in August this year. It was around what time 118 whatsoever, and it went all the way up to 190. Very, very good return. I think it was part of our result sheet here as well, somewhere in the Alibaba right here. It gave us something around 30-40% return on that particular trade because we quit earlier because of some signals. Now, recently, what Alibaba is doing, all of a sudden, it has dropped and it has given a first stage signal on the downward side on the bearish trend. Now, will it come here, this or that? I don't know. Nobody knows what is going to happen. But being a strong stock, but it's a Chinese stock, so it's more volatile. So when it rises sharply. When it falls sharply. Both ways. Most likely, it will find support either here on this line or not here, then this line. But for the time being, it is a neutral sell because it's come out of this zone, the green zone. It's a sell zone. Why sell zone? Because we have this signal here that the trend has changed or is trying to change. Will it be successful? We don't know. So that's why I am personally more comfortable from my experience to if the market is in a bullish trend, again, we have to establish if the market is in a bullish trend. And then it should be a leading stock in a leading industry group. And then we look at that, and if the TR signal is giving us a buy point, then we buy at those. That's how we get this high success rate and those high returns compared to the one where we lose less. Now, how do we know? Again, a very basic question that what is the general market trend? Is the leading stocks and leading industry groups or yes or no? First of all, we need to know that. So the market is something much bigger than an individual stock, and we have different parameters and methods to evaluate whether the market is taking risk on or not. So that's part of our weekly commentary. We discuss it over there. For an individual stocks, we use tools beyond our Excel tool. Like for example, this is NVIDIA. So NVIDIA is strong against index starting from November last year. You see the ratio was 0.01, now it's 0.028. And NVIDIA within its group, what is the group here? Semiconductors, technology semiconductors. Within the semiconductors, NVIDIA is beating its peers as well. So that's why we're saying that, okay, within this industry group, NVIDIA is a leading stock. Compared to someone like maybe Qualcomm, Qualcomm was not a leading stock in a leading stock group. Let's see the Qualcomm. The Qualcomm compared to its own group, see, it was here, right now it's at the bottom. So its peers, other semiconductors are beating Qualcomm. And Qualcomm is also, compared to its broader S&P index, is also down. It's not beating it. On the other hand, the group itself, the is beating S&P 500 handsomely. So should we go for Qualcomm? Why? Because if we go for Qualcomm and we stuck here somewhere, then we can remain stuck for maybe a year or so. So for last 1 year, Qualcomm is still there around 155, 153. 1 year ago, in fact, in August last year, it was at this point again. So Qualcomm is not something for us to invest and then wait for a year or 2 years before it starts moving. We would like to we go for something which is leading in its industry group. Not only this, we also take a look here within there's our tool also tells us that whether it is being bought or not and accumulated by the this particular stock Broadcom has a high accumulation distribution rate. Means the Wall Street is accumulating its share. At every pullback, you should expect Wall Street and the investor will come and start accumulating the share at cheap prices. Compare this with accumulation distribution with Qualcomm chart, and you see its accumulation distribution will probably, one second here, not very good. It's not a straight curve. I mean, Wall Street is still accumulating it, but right now it's declining, and it is still in a kind of a not a very good trend. If you want to take a look at some weak stock, for example, Accenture. By the way, Accenture is a good company. Without taking a look at the accumulation distribution, I can tell you it's under the 200-day line. Every time it tries to come back, it fails. It means Wall Street is not preferring this stock. Similarly, this accumulation distribution is at the same place where it was 3 or 4 months ago. So there are different ways of evaluating the stock. Now, it will be interesting to see how the TR chart would look like. I can tell you the TR chart will give you a red zone or an orange zone at its best. It cannot give you a green zone because it is below its 200-day line. Simple as that. Let's see the TR. What does TR chart say about a weak stock? It changes to CN. Something is wrong with the. I think Accenture is uh, why it is ACN. Let's see if that's the right symbol. I think Accenture is traded on New York Stock Exchange. Okay, Accenture is traded in New York Stock Exchange. As you can see, it's a strong sell zone. And the sell zone again is started recently, the down arrow. So would you like to go for this? Buying it on a pullback? No. Why? Because the stock, maybe something fundamentally is wrong with the business. Is wrong with this company. Every time when it establishes a green zone, it fails and it never reaches its buy point. So we are not going to even buy this on pullbacks because we know the stock is weak. It is not leading against this is against the same. It's not leading against its peers in the same group and in the same like this. Its group is DJUSSW, which is technology software group. So it is falling behind its own peers in the same group against the broader index. Its TR chart is telling us this is a weak stock all the way back to 3 or 4 year, whatever. So why should we even take a look here? Let's take a look at maybe 5 years and weekly chart on the TR indicator. So why should we waste time on this? Now, TR chart does not predict what is going to happen. It tells you what exactly. Now, you evaluate a stock that whether it is this is by the way one second 5 year chart for TR chart, and starting from you can see whenever it tries to come back, normally it fails its green zone, and for a long period of time, maybe starting from somewhere like last year, it is in a red zone. So on every pullback, the pullback itself fails and it falls further, it becomes a falling knife for us. We don't want to be in this kind of stocks for swing traders and medium traders like us. Now TR chart on SPY. So let's take a look at the SPY. SPY full code is ARCX is the exchange as far as I remember for Excel. And SPY is the SPY S&P 500 ETF. And now we are plotting a 5 years weekly chart. So SPY, as long as it is come out of this strong green zone, it's testing its 50 days 50-week line. So can it come down? Yes, because when all it comes suddenly comes down with this momentum, normally it goes back to these areas. But it can find support here, and then it can come back. So this is how the SPY looks. And in fact, this TR chart works very good on the weekly chart as SPY. Every time when there is strong green zone, with the exception of maybe this, even here, your stop loss was here. So it comes down, you stick with the yeah, S&P 500, and as long as the green zones remain there, or a pullback does not appear, pullback to this 10-week line or 30-week line, then you are good to go. In fact, this worked very good as well for Nasdaq QQQ. You want to be a long-term investor on the QQQ itself, Nasdaq 100. See its results here. This is QQQ, Nasdaq. Every time it comes to the buy point, crosses it, and in a green zone like this, or this, it gives you good return. Right now, it has come. It's a neutral buy. It comes out of because of last week's price action. Now, here you want to make a decision. You want to remain with the QQQ, long with the QQQ, or you want to get out and maybe buy at a pullback. Chances are that this Nasdaq and the S&P 500, because we are heading towards a bullish period starting from October 27 onwards to the mid of Jan, 18th of Jan, is generally a very bullish period for markets. So chances are that it will find support either on here or here. Call is yours. You want to, if you are here, you want to see your profit cushion to be reduced and profits to be eliminated, or you want to increase it, do some DCA approach and add some positions here. This is up to you. If I were you, I will never add positions while the TR chart is giving me this kind of signals, this orange or the red one, because this is highly probable that on every attempt to come out of this red zone, it will again fall back, unless and until you find something like green again. So in other words, TR chart can, with is buy and stop loss points in these zones can give you a very good idea where the market is heading towards, and what are what are your chances to stay green or stay red. Low volatile stack like PG, TSX. There's a question about PG and TS. PG is Procter and Gamble, I think. So let's see Procter and Gamble, and let's see how 5 years in the weekly charts says that. Procter & Gamble is a New York Stock Exchange stock, so automatically sometimes there is more than one same symbol for more than one stock. Now the Procter & Gamble for last how many, maybe last year something like, it's not in a good trend. It's red. It's in a strong sell zone, as you can see, and it's a persistent sell zone. So you would like to be here? No. If you are long, if you are short, then it might work. Now, if you're in shorting the stock, which by the way we are not, then these buy zone can make you can appear as your short zone. So every time when it comes here, you short it, as so long as it is red, with your stop loss above that buy point. But I'm not in favor of adopting the short strategy. That's why I have disabled the back test version or the skin version of the shorting here. So you cannot, you only see the buy and stop loss signals here. But question is used to predict. Look, prediction, who knows what is going to happen? Let's say you are here. It's giving you indication that you have a strong momentum in this particular stock. So in one way, it is giving you, telling you that there are strong chances that the stock will continue. Now, at what point it will stop, that's another story. So it gives you a very good idea. For example, if you're just trading indexes, maybe SPUS, and you come for maybe 1 year. So every time when index SPUS is an ETF for S&P 500. So every time when you come to this buy point and it is in a green zone, you see it gives you a very good entry and tells you that okay, at least this stock has a strong upward momentum. This strong is in a bullish trend, and this is your suggested stop loss. As long as you don't you can give this room. So it can always give you good entries and it always give you a now what is should be your aim. Generally, each person has a different strategy. My recommendation is that once you have 15 to 20% of profit, take some profit off and let the rest run as long as the stock remains in your favor. For example, you bought the stock right here in this green zone, this buy point. When it reaches here, you have 15% gain. You take one third, 1 second, half. If it comes down and again come back, you might add one to add your position. That's everyone is different. It's your strategy. Right now, you still have some decent gains. Something like from maybe 43 and it was 50, more than 20%, and then it came down. In how much period of time? Only this is June, only 4 months. In 4 months, you earn more than 20% of profit on nothing but the index itself. Question is, what is the difference of yellow, orange, and green zones on chart? Light green zone means first start with this little triangle. This is the first stage of bullish trend of TR signal. This means the trend is now starting to change. So if you are an risk taker, you can even go here. You see, if you were a risk taker and you said, okay, the trend has starting change, let's take some risk and enter here at 38.11. That could have given you a very high reward to risk with your stop loss below your low level. Then the light zone come. Light zone come means now there is confirmed uptrend, but it may be weak. It may not be very strong. And when you have a green zone, that means that now you have a very strong bullish trend with a high momentum upside. Flip side, when you see this diamond, red diamond, it means this is the first stage. The trend is trying to change. It's no longer an uptrend. It's tried to change towards upside, failed. Now it's trying to again go back in the reverse direction. Then this orange yellow band, which tells you that it's a weak or not necessarily weak. It's a bearish trend which has established, but it's not very strong. And when we have this kind of red zone, it means a strong bearish zone, strong bearish trend. Do not expect it to come anytime soon and start giving you an up signal once in a strong red zone. So the market remained itself for maybe 2-3 months in this strong red zone before it attempted, failed, then again attempted, tried to come back, and then establish a green zone. That probably was, if you missed this first early entry, then this was the time to make another entry here. Okay, so that's pretty much it. That's the explanation of the trends and the two different strategy breakouts and pullbacks. I did not go into depths of pullback strategy. The pullback normally works when you are in a green zone, strong. And for some reason, stock make a come down. Stock come down, and it's fine testing this support like this line and this. This is a pullback, and then when you might want to get on board on this pullback. Because similar to a strong bull market or strong bull trend does not overnight change into a straight away red zone immediately, except for maybe COVID days. There it happened. And here a strong red area does not convert into a strong green area overnight. It takes some time, multiple attempts in either direction to change its direction. Question was about the cost of subscription and others. So we are heading towards, okay, just give me a second. These are different TR indicator legends. It tells you a strong sell. This down arrow means he just started. Neutral buy, neither sell nor buy, not enough signals to make a decision. A strong buy, just started with this up arrow last period, which is last day, would be last week. With check mark, it means it's within the 5% of our buy point. It may be a time to buy. Asterisk means it's not only within 5% of buy point, it has strong relative strength compared to S&P 500, as well as strong accumulation as well. So that's the something which we would like to see. It has much higher chance of being successful if any stock TR indicator legend give you this kind of signal. Where do you get this signal? Right here in TR status. Okay. Regarding the question was about the pricing subscription, the software itself costs you $120 plus tax. It comes with 1 year of free weekly commentary, stock analysis, and stock picks. Very soon, it's about time, maybe within 2 weeks of time, the commentary and stock picks will be separate. If you don't want to buy software, it will be $10 per month. And you will have different educational series and articles separately for just for the subscribers. And if you buy the software, whether you use it or not, you will get 1 year of this commentary and stock analysis absolutely free with the software itself. There's a question. Okay, another question. Does this tool tell the target range for exit, especially the profit? That's a good question. Target range depends upon your aim. Like I said, I don't set a target except for 15-20% initial profits. So if I am in a position, I take something off between 15 to 20% so that I have some money in my pocket from that particular trade. Beyond that, if it is a bull market, that can carry on. So why should we have a target? Okay, I will stop here. As long as the market is in my favor, it is not pulling back, the stock is in my favor, I will keep going, ride the trend. That's how we found those winners here, like 120% or 100% like Nvidia, because Nvidia is a long-term stock, 90% whatever it is. So we don't want to have a target, just keep on going. If I'm not in a need of money to take out from my profit, I have made some initial money. As soon as I made some initial money, like 15 to 20%, we raise our stop losses to zero. So on that particular trade, we're not going to allow the stock to go back and give us net loss. It will remain profitable for us. Even if it goes back, it will be close at break-even level. And that's how we are riding these trends, as long as it is in our favor. IONQ, Alibaba, ALAB, Nvidia, GDS, Google, 60% or 50%. Question about can you generate a list of S&P 500 and the strong? Yes, you can do that, but it will be a slow going for the time being, because you have to, in this particular screener, you have to make this list all down all the S&P 500 stock 500 and then run this thing. So it will take quite a bit of time. It will go through all this. It will sense how many stocks are there in list. For example, let's say I have a list here, and I have a small list of this, maybe how many stocks? 10 stocks. I transfer this list here, so it transfer it here. So there were previous stocks, and it added those 10 list stocks here. And if I go and run this screener one by one, it will scan it and put the TR daily and TR weekly status, this status against each stock right here. If I want to go and see the chart with the buy point, then I have to put that particular symbol here and put the buy points here. So through this method, we can do the reverse engineering and scan through all those 500 stocks, but it will take a long time for 500 stocks. Because one by one, it has to download the data for all those 500 stocks, run through these algorithms, calculate their TR status and the buy signals, and then come up with this. So it will take a while. Okay, so there's no other separate things. I hope I have answered all the questions, including the subscription and the pricing of this. If you want to buy, take a look at that. There my video channels and YouTube channel. I will upload a recording of this particular session as well on YouTube channel. You can visit the website, and there's some promotional material as well, introductory video. You can take a look at those as well. This coming Sunday, we are going to have a stall here at the MFD, Muslim Family Day, and Cyprus. I will share the address, and you can come and if you are in Houston and vicinity, in greater Houston area, you can come and see me and see a demonstration of the software itself. and visit our booth. Software is one-time cost. Yes, it will be. You'll software. All those customers will continue to get free updates for 1 year on the purchase of software. But it can you can software is your and you can keep it and run. Can the software indicate if a stock can be traded for a long time using the break or breakout strategy based on technical fundamentals? Software, what exactly is the question? Can a software indicate if a stock can be traded for long term using pullback or breakout strategy based on technical and fundamentals? Yes and no. So it very much depends upon your personal choice. For example, you have conviction in NVIDIA. Let's NVIDIA, for example. And maybe NVIDIA we plot for 3 years on weekly charts. Now I'm a long-term buyer. I disclaimer, I own NVIDIA positions as well. So let's say you are here, you bought at this breakout, gives you a very good signal on buy point. Green zones, you started at 54.71, right? Right now, how much? 190, something like that, 187, whatever. It gives you approximately 200% return in how much time? Less than 2 years. So this is your conviction. You want to remain there? It's up to you. Situation can change. Like earlier this year, situation changed. So we got out of this stock when it breached this line, even Nvidia. But when it again gave us this buy point, we again got on board because we don't know how long this thing can continue. There were too many uncertain parameters in the market. It could have been there for an extended period of time. We don't want to get stuck with this thing, although it was Nvidia long-term stock. But as soon as another buy point appears and green zone appears, we again got onboarded, and we came here something around 112 and 13, even below that when this green this early entry, when this green triangle appears. Why? Because I had the conviction in Nvidia. I knew the company, I knew its products, I know its history, I know its competition. We have done the fundamental research, so we had the conviction. So okay, we can take some risk. Okay, enter here, maybe a stop loss here, 94. Enter here something around 100. And I entered probably at 112, 108, and I told my customers and people who follow me that this is a buy signal appearing on Nvidia. But I won't give this signal to other stock in which I have less conviction unless it gives us a strong green zone. So by that time, maybe it's a bit late. For Nvidia, it was not. Okay. What other questions? Pricing is one time, no monthly. Subscription will be monthly basis. What is there? What is the prediction for Monday? The sell-off buying opportunity was the beginning of the bear market. We don't know. We don't know. We don't want to predict it because we don't know who's going to make another tweet, and who is going to make a deal immediately after Monday. Chances are there this when you have this kind of a strong down signal like we had on Friday, chances are there that it will continue maybe for maybe a couple of days. So the S&P 500 will find a support. It's already below 50 days. Let's see S&P 500. Now this is nothing to be sugar coated about it. See the size of this bar compared to this bar. Those are very small bars, in, slowly increasing. All of a sudden, you have this big bar. So this means this, all of a sudden, a strong momentum downwards have appeared. Now, there will be some time a strong bounce back, and it will happen on Monday. Most likely, a bounce will happen. The point is where it closes on Monday. If it closes somewhere here, an inside day or on the upper side, then it's a positive for the market. If it is closes towards the lower side or even below it, then it's a negative, and this trend will probably continue. Maybe it finds support at this. This is daily chart, 50-day at 6534 here, and sorry, Nasdaq probably is below its 50-day, and S&P is still not. After this huge bar, generally, it you find a bounce back, only to find it rolling over. But history is on our side. Maybe that this trade thing gets over very quickly, then the market will resume its uptrend immediately. So we will see, and accordingly we will take decisions on that. Okay. Yes, we are considering offering this tool on a web-based portal tool, right? But we need to reprogram the tool itself. A lot of reprogramming needs to be done. Resources needs to be allocated, and then we will probably. I think generally the customer like this idea of buy and sell and green zone areas and these early entries. So we will move hopefully I cannot give you the exact date from the Excel-based environment to a web-based portal. All right, if there are no more questions, then it will be pretty much it. I appreciate everyone's time. I hope you found it useful. Any other question, you can always drop me through my WhatsApp group, or you have other like Facebook or Threads pages, and I will be more than happy to answer those. And if nothing else, then we would like to call it a day. And I appreciate your time. And if you are here in Houston and next Saturday in the vicinity, then definitely come and meet me personally. Thank you very much, guys. And I will, as promised, I will upload this recording on my YouTube channel, maybe by the end of today. Okay. Thank you very much. You have a nice day, everyone. Bye bye.